This is the Southside School of Financial Freedom watch list and market report for the week ending August 22nd, 2020. Our question this week is, who owns Apple? The answer will be provided later in the video. The market does one of three things every day. It goes up, it goes down, or it stays relatively the same. There are many possible reasons why the market goes up, down, or sideways. Economic outlook, the price of oil, trade tariffs, interest rates, or even negative and or positive sentiment. That is, the belief that things are not going to go well or that they are going to go well. This week, the market was mixed. The Dow Jones Industrial Average increased 0.69% on Friday, but it was down minus 0.002% for the week. The S&P 500 increased 0.34% and closed at an all-time high on Friday. It was up 0.72% for the week. The Nasdaq increased 0.42% and closed also at an all-time high on Friday. It had a 2.65% increase for the week. Looking at the week, we can see that the Dow Jones Industrial Average was down 3 days in a row. That's Monday through Wednesday, while the S&P 500 and the Nasdaq charged ahead. All the indices were down on Wednesday, and they all finished in the positive on Thursday and Friday. On Thursday, the new unemployment claims were over 1 million again, 1.1 million versus 923,000 expected. The news did not seem to affect the market as all the major indices closed in the green on Thursday. Congress is still on vacation with no new stimulus deal in sight by the weekend to help people during the pandemic. The Democrats held their national convention this past week, which seems not to have changed many minds. Apple topped $2 trillion in valuation, and the S&P 500 and the Nasdaq closed at all-time highs during the week. New unemployment claims, congressional actions and inactions, pandemic developments, and the market hitting new record highs are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down, but with an upward drift. The market will continue to go up because the powers that be want the market to go up. And one of the powers that be is the president. He will do what he must to get the market to go up. Apple is a favorite corporation of the president. He has met with Tim Cook, the CEO of Apple, several times during his administration. The president has crafted his tariffs against China while at the same time allowing Apple to continue to produce their products in China without criticism. This week, Apple reached a valuation of $2 trillion. That is, if someone or a group of people, institutions, banks, whomever, wanted to buy Apple, it would cost them $2 trillion to buy the whole company. Which brings us to our question of the week. Who owns Apple? Is it Tim Cook, the CEO? He is certainly one of the owners. Apple is owned by thousands and thousands of people. The insiders, that is, people who work for Apple, own about 0.07% of Apple. That's less than 1%. And Tim Cook, as the CEO, is an insider. However, he is not the top insider owner of Apple. Here are the top 10 insider owners of Apple. You can see Tim Cook is listed as number 2. And yes, That is former Vice President, climate change warning advocate, and Nobel Prize winner Al Gore at number 4 on the list. He has about 115,000 shares. If you multiply that by Friday's share price of $497.48, that means that the former vice president owns more than $57 million worth of Apple stock. It's good to be an ex-politician, right? Institutions own about 62% of Apple stock. And here are the top institutional owners of Apple. Notice Berkshire Hathaway Incorporated, the number 3 institutional owner. That is Warren Buffett. You have heard of him, haven't you? If not, please. And here are the top mutual fund owners of Apple. Almost 38% of Apple stock is owned by the general public. That is the thousands and thousands of people out there, which could include you. But do you own Apple? Do you own an iPhone, an iPad? How about a Mac computer? How long have you known about Apple? Do you know about Apple when it topped $1 trillion 2 years ago? The price was around $210 a share back then. As of Friday, the price is $497.48 a share. Is it too late to buy Apple stock? Is Apple stock price going to go down now that it has reached an all-time high? It probably will pull back a bit, but I don't know which way Apple stock or the market is going to go, and I don't care. I trade the market as it is, not as it should be. I simply take advantage of the market as it is. I take what the market gives me, whether it's going up or down. How do I do that? I apply the Southside trading strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list from the week ending August 22nd, 2020. Notice Apple is not on this list. I do have it on another list, but it's not on my trading list. I trade at least 3 of these stocks on the list every week. The strongest performer on the list this week was CrowdStrike. That's CRWD. It's in the 3rd column. It increased by 10.64% for the week. I did not have a trade on it, but I have traded it in the past, and I have generated cash flow on it in the past. Whether a stock is going to go up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it by using the Southside trading strategy. The Southside strategy involves trading for weekly cash flow. That is, trading for income. SPY is shown at the bottom of the 3rd column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index, while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. And guess what? SPY is a top holder of Apple. It is number 3 of mutual fund holders. The ticker symbol for SPDR S&P 500 ETF Trust is SPY. Oh, you don't want to buy SPY? Well, look at all the other mutual funds that hold Apple. Notice they are mostly index funds. Please remember, an ETF is like a mutual fund, except you can trade it like a stock. You see, you cannot get in and out of a mutual fund as fast as you can a stock. The ETF allows you to get in and out as fast as a stock. You can get in 1 minute and get out the next minute. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? As of August 22nd, 2020, my portfolio is outperforming the S&P 500 index ETF SPY. Year to date, my portfolio is up 15.22% versus 11.54% for SPY, a difference of 3.68%. I am beating SPY by 3.68%. This week, equities, including puts, calls, and ETFs, make up 89.25% of the portfolio. Cash is 10.75%. The cash flow generated for this week was 1.34% of the portfolio account value. The account value decreased by 0.58%. Meanwhile, the S&P 500 ETF SPY increased by 0.77% this week. I sold option contracts on 8 positions this week, 5 calls and 3 puts, that range from $35.35 to $364.34. You can get more details, including the total dollar amount of cash flow for the week, on the website Southside School of Financial Freedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the Southside School of Financial Freedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street, by Melvin C. Dunia, available on Lulu.com and Amazon.com. Please like, share, subscribe. ADOS, ADOS.